Common size analysis, also referred as vertical analysis. It is a tool that investors use to analyze financial statements. Vertical analysis refers to the analysis of specific line items in relation to a base item within the same financial period. For example, in the balance sheet, we can assess the proportion of inventory by dividing the inventory line using total asset as the base term. In the balance sheet, the common base item to which other line items are expressed is total asset, while in the income statement, it is total revenue. The balance sheet common size analysis mostly use the total asset value as the base. On the balance sheet, the total asset value equals the value of total liability and shareholder equity. Investors use the common size analysis to see how firm capital structure compares to rivals. They can make important observations by analyzing specific line item in relation to the total asset. Let's take the example of Sulaiman Sutera Sdn Bhd common size statement of financial position as at 31st December 2012. From the table, we can deduce that cash and bank balance represent 6% of the total asset, while marketable security represent 5% of total asset. In the liability section, we can deduce that account payable represent 15%, other creditors represent 3%, and 6% bond, 25%, and shareholder equity at 37% of the total liabilities and stockholder equity. Income statement common size analysis, the base item is usually the total sales or total revenue. This ratio tells investor how the company is doing in terms of revenue, and they can make prediction of future revenue. Company can also use this tool to analyze competitor to know the proportion of revenue that goes to advertising, research and development, and other essential expenses. For example, here we have the common size statement of profit or loss and other comprehensive income for the year ended 31st December 2012 for Sulaiman Sutera Sdn Bhd. By looking at this income statement, we can see that in 2012, the amount of money that the company paid for selling expenses is 10%, administrative is 5%, and for general is 6%. The company also pay interest to the shareholder, which is 2% of the total revenue for the year. The net operating income. The net operating income or earning after interest and tax represent 13% of the total revenue, and it shows the half of the business cooperating areas. The net income can be compared to the previous year net income to see how the company performance year on year. So one of the benefits of using common size analysis is that it allows investors to identify drastic changes in a company financial statement. This mainly apply when the financials are compared over a period of 2 or 3 years. Any significant movement in the financial across several years can help investors decide whether to invest in the company. Common size analysis is also an excellent tool to compare companies of different size but in the same industry. Looking at their financial data can reveal their strategy and their largest expenses that give them a competitive edge over other comparable companies. So that's all for common size financial statement. The end.